Good morning, everybody. It's Dan Basse and Ben Buckner with you again on Thursday, the 2nd of October. No weekly sales report. The thawing of U.S. government in terms of relations between the Democrats and Republicans looks like it's worsening. So the shutdown is likely to continue for an extended period of time. As we look at the rally yesterday in the market, Ben will talk about it here in terms of a Trump tweet, if I can say that, or post on Truth Social, which indicated that on the agenda will be U.S. soybeans in the Trump Z meet and the sidelines of the APEC meeting on October 31st. Now, we also had private crop estimates come out from StoneX. We will have S&P Global come out later this week. We are not expecting the USDA have their crop report on the 9th of October just because of the government closure. Whether or not we have a crop report this month is being debated. My own suspicion is it'll be delayed until we get to November. When we do get weekly sales and shipments back, it will take some time. Back in the last shutdown, it took as much as an extra 6 weeks. So the market will be lacking this data. And based on yesterday, Ben, we'll talk a little bit about it. I know you'll get into it, but on this Truth Social, has anything really changed in terms of the balance sheets of the United States corn and soybeans, or was that basically, how should I say it, hoping that we do get China back at some point?
Yeah, so we'll kind of jump into it. And I know the government shut down again. We've done this a couple of times in the last decade. So the idea is, we're all trading blind, but I guess our pitch is that that's not really the case. We still have lots of information, trade flows, global cash markets, yield reports, et cetera. So that's kind of our sales pitch. $1, of course, gets you in. So we do not feel lost yet. But yesterday, soybean market started to recover pretty quickly and pretty substantially. So the messages were coming at us pretty fast and furiously. What's going on? And lo and behold, there was the post. So Trump posted on Truth Social about at least acknowledging the farming community that's gotten pretty loud, and I think rightfully so, about what's happening in terms of trade, especially cash markets regionally. Thinking about North Dakota soybean basis still, $1.40 under the Board of Trade. So this is all really, really dire, and something needs to get done. But here's what at least we're acknowledging: the administration's acknowledging the problems the farmers are facing, and so this post kind of highlights that Trump first will meet with President Xi at the APEC meeting later this month in Malaysia to discuss ag trade specifically. So it makes sense that the market gets spooked periodically and cover shorts. Again, trade deals can be solved, I suppose, with just the strike of a pen. But I don't think anything has changed. We've done this before. Trump's previously tried to get China to buy 4 times as many soybeans from the U.S. Nothing really happened. So post to post, I think the physical reality is one, nothing gets done in the month of October, so we've lost another month of peak soybean sales to China. And thereafter, just thinking about how trade deals are constructed, this still just keep in mind, and we knew this going into really January, that these are going to be measured in months and maybe years. We haven't heard anything on China's side acknowledging even the post or discussions about U.S. ag trade. So we just want people to be prepared for maybe nothing gets done with respect to Chinese demand for soybeans. And we want a deal to get done. We want to be bullish soybeans and ag markets in general. But I don't think that this post changed the fact that China is not buying soybeans from the U.S. today. And pace analysis still alarming. Final U.S. soybean exports, as low as 1.2 billion bushels. So something has to physically get done. We all know the window for U.S. soybean exports closes probably this year, the final part of January. So every week that passes, or the more concerning soybean trade gets. Otherwise, diving into everything else that is happening, I think that Mother Nature is still cooperating with North America. Yields are what they are. Of course, it's drier than desired east of the Mississippi River, but now it's facilitating harvest. I also just wanted to highlight this, and we'll move on from U.S. weather pretty quickly, but winter wheat is really all that matters now. And so assuming that NOAA's updated 7-day rainfall forecast is exactly correct, we're going to get rain exactly where we need it. So places like central Kansas, southern Nebraska, Kentucky, Indiana, Ohio, West Tennessee, all pretty sizable winter wheat producing regions. So I suspect if in 3 weeks we do get that national winter wheat crop rating, it's going to be at or above average pretty easily. So, and just highlighting that part of the ag market weakness is just driven by pretty good weather, both hemispheres, for the last 12 months. And that looks to continue. So keep that in mind, again, as we think about managing it. You probably won't get the October report, but that is okay. We're monitoring each and every yield report that comes out. And we really like using data from something called, First Seed, Farmers Independent Research of Seed Technologies. And so this is kind of a monitoring body. So what they do is they test a lot of the hybrids, keep intact their tests for genetic improvement. Again, kind of an organization that wants to make sure that these genetic improvements are doing what they say they're doing. So we get lots of yield data, and it's still very, very early. So sample size is pretty small, but just wanted to highlight where we are so far. So it does look like soybean yields to date underestimated by USDA by up to a bushel an acre. Same thing in corn. So I think once we do get the next USDA crop report, probably thinking about lack of surprises in corn. We're still at 185 at Ag Resource nationally. And soybeans could be the surprise. And if you remember, we've talked about this before. A lot of this is just, I think, populations in USDA protocol. So they're using a pod weight currently unchanged from last year. And remember, it was very dry, very hot last summer as well. So similar pattern there. Pod counts are up 10%. Pod counts, again, from September to final tend to go up by 1 or 2%. So just the math associated with this does suggest soybean yield probably will be revised upwards whenever NASS comes out with their next crop report. And so that's something that FC Stone highlighted yesterday, a record 53.9 bushel an acre soybean yield from them. And even corn production of about 16.6 billion bushels. So none of this seems to be dislocating supply enough to change prevailing trends. So large crops, Chinese demand, lots of wheat supply. Kind of lastly, just want to think about this a little differently as we continue to debate yield hyperactively, and especially since we probably don't get the October report. Corn market, based on acreage increases, which we think may go up again because of the silage, our work on silage acreage assumed by USDA. Yield of 185. We've added 200 million bushels to carryover stocks in the old crop balance sheet earlier this week. So just from a high level, corn needs to find 16.3 billion bushels of demand, kind of at minimum, to keep stocks, at 2 billion bushels. So export demand's been pretty robust, but we need to maximize exports indefinitely. We need to maximize feed use, ethanol production. All of this needs to happen really for the next 12 months or so. And this may be challenging. So the sorghum still $1.26 under the Board of Trade. Hard red wheat in Kansas still 90 cents below KC futures. Corn today is actually kind of expensive in Western Kansas compared to alternative feed markets. So we want to be pretty clear. We want to sell rallies because of yield reports so far, in aggregate, the need for 16.3 billion bushels of demand. And again, the concern that we lose some measure of world market share because of these larger crops in Brazil, Argentina, Ukraine, the end of drought in Argentina, et cetera. So I think not much has changed. The Truth social post yesterday did provide, I think, warranted the recovery, but we've got to prove that we're finding Chinese soybean export demand and that corn does not lose a bushel of demand for the next 10, 12 months.
Well, good rundown, Ben. I think Secretary Besant's out asking, or saying that the soybean farmers can look for some news next week. Let's hope that it's the financial news. I'm hearing that that's the case, that we'll get to have some itemization of maybe what the administration is thinking in terms of how many billions he'll hand out for the damage that, of course, China has done by not buying soybeans through the month of November from the United States. Everybody have a good trading day. Well wishes to you. Good harvesting and be safe. Ben and I will be back tomorrow morning. Stay well, and we'll have another featured article in terms of what the markets are offering us longer term. Again, managing risk is the key here, as Ben has stated. We are all looking for that for you, the farmer, to make sure that we maximize business revenue going forward. Be well. Bye-bye.